Welcome to Plant-Based Portfolio, where we explore all things related to investing and trading plant-based stocks. Whether you live a plant-based lifestyle or not, we help you to put your money where your mouth is and invest healthily in companies that align with your values. In this video we are exploring the debut of the very good food company on the Nasdaq today. The addition of this fantastic company will grant another opportunity to put your money where your mouth is and invest healthily as you build your plant-based portfolio. Be sure to watch the video through the end where we share our thoughts on whether to buy today. Before we get started, go ahead and smash that like button to let the YouTube algorithm know that you like this kind of content, and subscribe and click the notification bell to make sure you catch the latest videos. Awesomeness. Let's jump into it. So, the news is official. The very good food company will begin trading on the Nasdaq today under the ticker symbol VGFC. For those of us who may be unfamiliar, the very good food company is a Victoria, Canada-based producer of plant-based food products under the Very Good Butchers and the Very Good Cheese Company brands. They make everything from plant-based bratwurst, barbecued burger, and breakfast sausages to plant-based garlic, pepper jack, and cheddar cheese. A chart checker of their over-the-counter listing, ticker symbol VRYYF, shows a nearly 43% loss year to date. When we zoom out to 1 year we see a 90% gain. Coming down to the financial performance, we see that revenue has been trending sideways quarter to quarter despite a year-over-year gain of 156% in Q2 2021. Net losses are massive with a 417% decline year-over-year in Q2 2021. The Very Good Food Company listing on the Nasdaq is important for a few reasons. First, this is not an initial public offering, or IPO. In fact, the Very Good Food Company has been trading on an over-the-counter exchange since August last year, as well as on other international exchanges. Mitchell Scott, the CEO and co-founder of the Very Good Food Company, emphasizes that the move to the Nasdaq is a huge accomplishment for the company in his statement. Trading on the Nasdaq is a mark of achievement and stature for qualified companies. Listed companies must meet financial and liquidity requirements and satisfy corporate governance and disclosure requirements on both an initial and continuing basis, said Mitchell Scott, co-founder and CEO of the Very Good Food Company. Here Scott is saying that the qualifying requirements for listing on the Nasdaq are much more stringent than listing on over-the-counter exchanges. Listing on the Nasdaq portends massive credibility for potential investors. He goes on to say, listing our stock on the Nasdaq is an important milestone that builds on the positive momentum from our increased scale and distribution, and new product launches. Along with increasing our visibility in the marketplace, we anticipate the listing to improve the liquidity of our stock, further broaden our institutional shareholder base and ultimately enhance long-term shareholder value. Additionally, we expect this listing to further enhance our ability to implement our multi-channel growth strategy into the US and Europe and optimize the company's return on invested capital. Here Scott focuses on the likely improved liquidity and attraction of institutional investors as benefits of the company of listing on a popular exchange like the Nasdaq. Next, if we look at the current shareholder makeup of the Very Good Food Company, we see that institutional investors only make up 0.5%, while insiders make 25.6%, and retail investors comprise the remaining 73.9%. This is a very uneven distribution. It is highly expected that the Nasdaq listing will better balance this out. We could expect institutional ownership, including hedge funds, to end up somewhere between 28.1% and 59.1%, which is the proportion of institutional investors in plant-based companies like Tattooed Chef and Beyond Meat, respectively. We can also expect huge institutional investors like Vanguard to take very small positions alongside innovation and plant-based focused hedge funds. Last, the listing of the Very Good Food Company on the Nasdaq adds credibility to the entire plant-based food industry. That is because the Nasdaq and the New York Stock Exchange have the highest level of regulatory scrutiny for companies to be listed. In order to graduate from an over-the-counter listing to a Nasdaq listing, a company must meet the following. The company and its stock must meet listing requirements for its price per share, total value, corporate profits, daily or monthly trading volume, revenues, and Securities and Exchange Commission reporting requirements. For example, the New York Stock Exchange requires newly listed companies to have 1.1 million publicly held shares held by a minimum of 2,200 shareholders with a collective market value of at least $100 million. Companies that want to list on the Nasdaq, on the other hand, are required to have 1.25 million public shares held by at least 550 shareholders with a collective market value of $45 million. Additionally, requirements for quarterly reports from which we as investors can gather important information and perform due diligence must also be met. Indeed, all of the companies we cover here on the Plant-Based Portfolio are either listed on the Nasdaq or the New York Stock Exchange. The more high-quality plant-based food companies that list on the highly visible Nasdaq or New York Stock Exchange, the more stable the industry will become. This is great for us as investors as we have more options to choose from to build our plant-based portfolios, though increased competition may negatively affect pricing power for individual companies, which in turn can lower margins. Ultimately, this will be better for consumers. Final thoughts. Graduating from an over-the-counter exchange to the Nasdaq is a big deal. And yes, we do plan to eventually add a very good food company to the plant-based portfolio at some point. But should you buy today, with the listing on a much more regulated and visible exchange such as the Nasdaq, it is likely that more investors will be exposed to the company and buy the stock. We would expect somewhat of a bump higher in its debut, but though it may not be sustained. This is a very interesting company and we look forward to covering it, particularly in the next earnings report review where we can dive deep into the fundamentals. Thank you for watching. We really hope you gained value from this video. Please subscribe and share your thoughts in the comments below. Let us know what you think about the very good food company and adding it to your plant-based portfolio. Thank you for joining us until the end of the video and being super awesome. Please check out some more plant-based portfolio videos right now.